talk about digital lending in Kenya. A new Kenyan bill seeks to license and regulate digital lending platforms in the country. This is in a bid to clamp down on the issuance of high-interest loans, as well as the predatory practices that have accompanied the industry's massive growth. Joining us from Nairobi to delve into this further is Jeptum Bullut, who is a partner at BMN Advocates, and also Michael Kioneki Kimani, who, of course, is the chairman of the Blockchain Association of Kenya. Thank you both for joining us. Jeptum, good morning to you. Good morning to you as well, Michael. How would you describe the situation in Kenya with respect to high-interest loans and what's being called predatory practices? Is it bad enough to warrant legislation?
Well, the situation is in a dire state right now, and that's why a lot of Kenyans have been asking the central bank to intervene in an aspect of data protection, because it's a financial institution and it's needed.
Okay, and Michael, how would you agree with Jeptum that this legislation is needed for digital lending in Kenya?
I would say yes. I think the digital lending landscape was kind of getting out of hand. There was too many digital lenders. Anyone could just set up a mobile app, connect it to an M-Pesa gateway, and just immediately start lending to everyone and anyone. So the industry was kind of needed a bit of reining in, and I think this is that reining in we've been waiting for. So yes.
Okay, so you're both in agreement on that. All right, if you can help me, Jeptum, privacy issues have been highlighted as a fallout from digital lending. Can you illustrate what those privacy issues are?
Well, the very nature of these digital apps is that on your Android or your iPhone, you can go to your store and access them, download them. But of course, to use them, you allow the apps to have a lot of permissions on your phone. So these permissions range from contacts, from locations, to messages, and also on top of that, you're opening them up to your financial history outside of the digital apps. So most importantly, because we have a data issue, the privacy issues were that they could access your contacts, and in using the contacts to get back the loans disbursed, they would, without consent, allow third parties who are not yourself to repay back the loan.
Okay, thank you. So Michael, is that, as far as, is there a line, Michael, between privacy and trying to avoid default? One can try to understand a lender, trying to get that information so that they can make sure a loan doesn't default. But is that what Jeptum has just described? Is that privacy issue big enough to where you think it does render legislation necessary?
I think, Jeptum mentioned one of the most common privacy concern, and that was these apps being able to access your messages from your Android phone, and also being able to access your contact lists. And also, if they're able to access your messages in this market, then it means they're able to access your M-Pesa message, and that means they can kind of profile you. And a lot of these firms, some of them were not based in Kenya. They were foreign companies. So who knows where that data was going when it moves out of this country to serve as maybe in Silicon Valley. So that was one concern. I think the concern that really pushed this to the edge was when some of these digital lending firms would use the contacts they got from your Android phone, and then they'd call these contacts or your friends and ask them to call you up or nudge you to pay back your loan. I think Okash was guilty of this. And that is what I think really pushed the industry to the edge, because this was kind of crossing the line. When I even had an instance where I'd get a call from Okash about a friend of mine who owes a loan, and I'm like, what's the relation? They didn't list me as a guarantor. So I think that particular instance of calling your contacts and asking them to nudge you, that was probably crossing the line, and I think that's what got the public angry and frustrated about the digital lending apps.
Okay, thank you. So thanks for mentioning that. Thank you, Michael. Jeptum, I want to ask you to describe instances of, I guess this dovetails into public shaming of borrowers that have collected money from these digital lenders. How does this now translate into public shaming? What's happened exactly?
So I think we can, as consumers, we all understand the importance of credit. And what we can say about these digital lending apps, they plugged in instances where people needed quick, easy, accessible loans to fulfill their financial needs. The issue became now with, in a financial market, how are these loans restructured? How are they, recouped? How are they reclaimed? And the avenue that these digital lenders use is public shaming, as we say, of almost cyberbullying. It's aggressive harassment in nature. It involves people who are not even parties into when you are applying for the loan, which is the company and yourself. So you can see the need to legislate unregulated digital lenders in the market and put them in line with, banks, microfinance institutions, mobile money operators in the country.
Thank you for that. Michael, let me come back to you. I understand last year that the Central Bank of Kenya stopped digital lenders from forwarding defaulters' names to credit bureaus, credit agencies. Aren't there any consequences of that action?
Yeah, I think actually one of the consequences of that action was to kill the business of digital lending, because if a digital lender cannot list your name in the credit reference bureau, then it means there's really no repercussion for you if you default on your loan, versus, let's say, if your name was listed on the CRB. So I think that was like cutting the digital lenders on the foot, and I think that affected their business. I think the other thing about the central bank moving to stop digital lenders from listing defaulters on this CRB was also about coronavirus, because I think it happened around April 2020, which was around the time Kenya started moving into a lockdown. And the coronavirus affected the economy. A lot of people's incomes were affected. A lot of people started borrowing. The number of defaults started going up. Like a lot of people right now aren't making as much money as they used to before. So I think that was also to mitigate maybe public outcry against financial institutions by not listing people for petty amounts like $10 at a time when the economy is going through a crisis. So I think those are some of the impacts of the central bank's move.
Thank you for that, Michael. Jeptum, what do you say to the argument that digital lending apps in Kenya have narrowed the financial inclusion gap, if anyone was trying to push back on what's going on right now?
Well, it's true, because at the onset, digital apps had the hallmarks of financial inclusion. They were quick, they were easy, they were accessible, they were, following the banking of the unbanked within a mass population. And they had plugged into a large segment that weren't able to receive credit from, traditional institutions like banks, people who didn't have bank accounts or couldn't maintain the operations. Somewhere down the line, a lot of the digital apps fell off, and now some went rogue. Of course, not all of them. Most, the known ones are known. And because of that, it's become an animal that needs to be tamed.
All right. And Michael, let me come back to you. So is legislation where things need to go? What about awareness campaigns that inform borrowers of what to watch out for when they're downloading these apps and so on and so forth, Michael?
Yeah, I think, the economy is going through a tough time right now. I think some of us can even testify to this through our own social circles. Like, there's a lot more borrowing going on. And I think the fact that even some of the digital lenders are not operational right now, that has only pushed the source of lending from these digital lending apps to your friends and family. So I think the economy isn't doing great right now. People aren't doing as great as they were before coronavirus. So I think these digital lending apps, they did actually fill a role. I don't think any more awareness is going to stop people from borrowing money if they need money for their livelihoods or to plug in some income gaps that they have. So I think the awareness line and the financial literacy line, sometimes it's overdone, it's overused. I do think some part of this legislation is also about protecting the banking interests, because lending has mostly been a business of regulated financial institutions. So I think the central bank moving to rein in these digital lenders under its supervision is just to it's partly also to maintain the powers and authority that the Central Bank of Kenya has. It's tough to say whether it's good or bad, but this is where we are right now. They're going to get regulated, and I don't think any more awareness is going to help people from asking for loans.
Thank you for that, Michael. Jeptum, will this do anything to change the interest rate environments in Kenya with these regulations? Jeptum, are you with us? Jeptum, I was asking, do you think these regulations will do anything to impact in the high interest rates that are in Kenya right now for lending or rather borrowing? Okay, Michael, let me throw the question to you. Do you think with this legislation that you just talked about, will that do anything to impact rates right now?
I think all that it will do is we'll have more uniform rates because the central bank now will have authority over a lot more digital lending products versus before. I think before there are some products like, for example, M-Shwari, which is a product by one of the largest telcos in Kenya and financials called M-Pesa and Safaricom, and they were able to say they don't fall under the banking regulations, and so their interest rates could not be regulated. So I think what this will do is we'll have a more uniform environment where the rates are a bit more similar. But in terms of whether they will go down, I think that's a tough question because, like I said before, the economy isn't doing great. And I don't see the banks. I think that some of the rates are reflective of the state of the economy right now. I think what might happen is if the rates are too high, you may see people moving into informal sources of lending, like friends and family, like I mentioned earlier.
Fantastic stuff. Fantastic stuff. Michael Kioneki Kimani, chairman of the Blockchain Association of Kenya, and Jeptum Bullut, partner at BMN Advocates. Thank you so much for taking us through the Kenyan digital lending landscape and the legislation that's coming through.